Bitcoin could get hit hard because it's one of the most liquid assets in the world. Now, family, before I break down the reverse carry trade and why it matters for XRP, I really need to say this quickly. If all of this sounds new to you, or if you realize and nobody ever taught you how global liquidity works, please don't stay confused. All right, so here's specifically what's happening now so you can have a clear understanding. Japan's interest rates are rising. And when rates rise, Japanese bonds become more attractive. And when Japanese bonds become more attractive, institutions no longer want to keep their money tied in US assets. So what do? They start selling. And I don't mean selling a little bit. I mean massive forced selling of the US stocks, the bonds, the techs, the markets, all of it, the crypto, Bitcoin, whatever. Why? Because they borrowed yen decades ago. They converted it to dollars, invested those dollars in global assets, and now the yen is getting stronger and Japanese yields are rising. Those investors have to unwind the trade. They have to return the yen that they borrowed. And the only way to do that is to sell the foreign assets that they bought and convert the cash back to yen. That process right there is the reverse carry trade, and it causes sudden liquidity shocks, big market dips, increased volatility, selling pressure hitting assets that did nothing wrong, and forced liquidations in risk markets. This is why you may see some markets starting to shake even when the US economy looks fine. They fall because liquidity gets pulled out of the system by macro forces that most people don't even understand. And so here's the key part. Bitcoin could get hit hard because it's one of the most liquid assets in the world. If institutions need to free up cash quickly, they sell Bitcoin first, not because Bitcoin is bad, but because Bitcoin is easy to sell instantly. And this is where the opportunity for XRP starts to open.